Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 28th of March. Right, let me just give you a bit of a run through what's going on right now. Have a look at the week, across the week, where the major data is and what opportunities there are. Now, right at the moment, there's quite a few things happening just as we speak. Actually, let me just come over to the news, probably a good place to start. So there's a big lockdown going on in Shanghai as the sort of the next wave of the coronavirus sort of kicks in through there. Now that's put a huge dent in oil prices, and I'll show you those. They're down about 2.5%, 3% at the moment. I mean, they're heavily or highly elevated as it is, so they've got room to come back. But the lockdown there creating downward pressure. Obviously, a massive reduction in demand for oil in China. The other thing is there's a bit of a shift here, and I can see where the cryptocurrencies are really gaining some strength here, based on, investors are looking at the twin declines in US stocks and bonds. Right, the yields are going up. The equity markets don't look like that comfortable to be putting cash into at the moment. Obviously, with this high interest rate sort of environment that is being cast out there. So we've got a number of things really sort of colliding at the moment. I'm just having a look at the US equity futures, right? Good way to gauge what's going on. Should suggest a bit of a risk off environment, okay, buy dollars at this point. So we are seeing this happen, but the Aussie's sort of bucking the trend here a bit. And it's a little bit surprising, right? The dollar pairs, they aren't really rallying, but the other pairs are sort of drifting lower. Commodities here on the day are getting a little bit pummeled. Right, as I was saying, oil down here, it's getting whacked as well. So you'd think Aussie being a commodity currency would start to drift lower. Well, it's not just doing that just at the moment. I mean, the basket, the commodity index is up. Maybe that's a bit of a why the Aussie's holding up. Maybe a very close correlation between those pairs. But what we are seeing, if I just come back to a few of the charts, give you a look at that whole sort of global aspect, and then come into the different bits and pieces. You can see the dollar index is just jumping to the top side. This really correlates with some stops being triggered there below 109.80 in euro. Right, it's clear as day. This is probably the easiest or the nicest setup. It's a shame it's on a Monday, but we had the euro just sitting on support level here around 109.80. It's just drifted through that down towards 50. I'd say that's the catalyst for the dollar index to move higher. Obviously, the euro is about 58% of the basket there, so a good gauge. We've got oil here just sort of sitting above. It's tweaking with that sort of support line. That support line's orange, which tells me it's not like a great support line. It's only got a couple of touches. Gold also off. Once again, looks like gold and oil are sort of working very closely as a bit of a commodity bunch. Bitcoin here, right? It's shot to the top side. Now, this could actually even go a lot further, because if everyone's concerned about US equities and what's happening on the US bonds and everything else, a lot of uncertainty, they'll look for somewhere to stick their cash. Now, the cryptos haven't been traditionally like a nice safe haven because they're so volatile, but they have settled down somewhat, and we are starting to see all the cryptos go up. I'll show you the data in a second. So that could continue in this environment, right? You got the Russian-Ukraine geopolitical issue. We've got, the Federal Reserve very hawkish on interest rates, and other central banks kicking in as well. Maybe a good place to park some cash. Looks like it's happening at the moment. Now, equity markets, well, they had a nice sort of end of the week, but once again, we've got non-farm payrolls Friday. It's going to be interesting to see. We had strong numbers there. They've got to be talking higher interest rates again for sure. So we'll see how that really impacts. Now, having a look at the overall currencies here, just got them on the dailies. Now, no major breaks. Obviously, dollar CAD has broken down last week. You've got euro dipping to the downside here, as I just showed you there as well. Sterling not doing a lot, and this is the odd one out, right? Aussie really kicking to the top side. Like, they're talking commodities up. I know oil, silver, gold, everything's getting belted at the moment, but the overall index itself is up. Something to keep an eye on there. Kiwi just trading within the range, pretty much following the Aussie dollar. So not a lot to really rip into there. Euro was the cleanest trade, and I generally don't get involved that much on Monday. So didn't really sort of pick the euro move or get anything out of it. So just look at these equities, right? The ranges here are wild, big dips. It's just a dead duck bounce. Well, it's come back. It's going to be very interesting this week. We see another big down week. I think the markets will start really unloading some of their stocks, you know. Just smells a little bit sticky. Now, cryptos, just got the hourlies and dailies here. Okay, so as you can see, this recent move in Bitcoin has coincided with a breach above that sort of horizontal sort of resistance line. Probably some stops getting triggered, maybe even a bit more loading up. And you've got Litecoin and Ethereum there just cruising to the top side. As I said, with all this global uncertainty, they have been in the past a bit of a safe haven nest that could be something that builds over time. Now, what I was looking at very closely on Friday, and I was sort of mentioning this, some levels here around, copper's come back, broken down, retested perfectly, and then getting hit. This is the funny one, right? Because especially gold and copper probably more so, if these things fell, the Aussie dollar would fall, right? They have already fallen. Aussie's holding up there. So there's a few things out of whack here. Silver also getting hit today, but iron ore holding up there. It's probably the key to the Aussie stuff. But, you know, if there's a bigger lockdown in China, right, then everything's going to slow down, including manufacturing, iron ore, maybe drops off as well, like we're seeing happen to crude at the moment. So light crude, West Texas Intermediate, just cruising to the side. It's trading sideways. It has broken down, but it's not really going anywhere. Same with Brent. I guess that's weighed up with, say, a potential lockdown in China, or that's happening. US are talking about releasing more reserves. And then you've got obviously the Russia-Ukraine situation. It's all over the place. I think there was an attack on some Saudi oil distribution center as well over the weekend. So anyway, there's a lot of uncertainty around what's happening just at the moment. So what I'm trying to do is piece together the key components that I need to know to understand what the hell I'm doing. And this is where it comes back to the overall sort of global data. If I just come back to that, get on equities. So as you can see up here, the top here, I mean, the cryptos are trading technically very well. They are rallying. Why? Well, we've sort of just went through a bit of that. There's, you know, and then you've got the US equities. Well, the futures, I mean, down 0.3, 0.4. That's a decent enough move to get things moving for sure. The surprise is here, the commodities. I already thought they were turning on Thursday, Friday. They're really getting a pasting, but you know, that sort of level of volatility, it could just ricochet back the other way. You know, you got to wait and see how, let the dust settle over the weekend, wait till Europe and North America open up, get a grasp of what the bigger markets take on this stuff is, and then we can work it out from there. Safe havens, well, they're not really doing a lot for me at the moment. Oil is definitely something to keep an eye on. You'd almost be, if that move continued, which, as I said, whilst the Russia-Ukraine situation is still boiling away, you wouldn't think it's going to back off too far, but maybe a potential opportunity to sell, get into some of those individual oil companies. But so right now, it's pretty tricky. So one thing I would be doing is just getting yourself abreast of where the key moves are. Now, trading economics, good source of for calendar stuff. The very high impacting ones are the red time frames there, right? So you get the GfK consumer confidence. You can sort of just track where the focus of traders will be. And that's what this data does for you. It sort of tells you what the market's going to be looking at. You got some job numbers, obviously big week for US jobs. Some inflation numbers there out of Germany as we go through the week. ADP employment change Wednesday. Then you come down through Thursday. This is where the dollar really comes back into play too, because you got personal PCE price index, personal spending. A lot of building blocks for the US economy are coming out this week, and obviously with the key part to it, the unemployment figures have plenty to do with what policy the Fed are rolling out. So that's the sort of major part of it. The good thing is there's a bunch of Eurozone numbers as well. Ideally, with this move down, you're looking for weakness in the Euro numbers. And hopefully that connects with strong US numbers. You get a nice clean move on euro. That's one thing for sure. But there is actually, if I just come back, actually, there's a whole bunch of crude oil stock supplies changes. You want to be watching this stuff on Wednesday, right? If there's a big drop in their stocks, well, then that's going to put probably upward pressure on oil as we go through the week as well. So, and there's API crude oil stocks up there as well. So there's plenty of bits and pieces, bits for everyone, right? The impact on the equity markets, well, let's see how that goes. It's been rock and roll action the last week or two. I'd expect that to continue, maybe flow into the currencies. We are seeing global bonds starting to get involved as well. And so just weigh up what you're looking at, plan your trading week. Don't just turn the screens on and just go for it, because there's a lot of different things impacting like variable impacts across the board. And just to explain that, so like just for example, if I just go back to the Forex pairs, these are Euro, Sterling, Aussie, and Kiwi are all quoted against the US dollar the same way, right? So really, if the dollar's strong or weak, it should do the same thing. At the moment, we're seeing all sorts of weird stuff. Sterling not moving, Euro dropping, Aussie up rallying, and Kiwi a little bit higher as well. So when those four currencies are out of whack, that tells me that there's some weird things happening, and it's time to sort of have a look around, trying to work out where the movement's coming from. If you can work out where the impulse of the market is coming from, well, then you're a step ahead, and you can safely put on your risk. If you don't know where it is, well, you're guessing, right? And it's a pretty tricky market to be guessing at the moment. All right, guys, plenty to play for this week. Obviously with the non-farm payrolls as we get through Wednesday, Thursday, we've got lots of US numbers. It'd be a big build up, big pressure build up on those US payrolls, and we'll see how it plays out as we go through the week. All right, guys, have a good one. Cheerio.